Blog Talk Radio.
And good morning from sunny Orange County, California. It's Brian Dooley, CPA, with my virtual assistant, Rob the Robot. It is a bright, sunny day here in California, the end of December, and some people are watching the fiscal cliff, but most of us know that the fiscal cliff is still coming. And tax planning during this next maybe 5 or 10 years of government crisis is more important than ever because, let's face it, they need money. They need your money. So today we're talking about something that's putting together two types of innovation. One is business innovation, and the other one is tax planning innovation. And as most of you know, I'm not a fan of tax planning that involves a tax shelter or deductions, both of which cost you money, and when you look at the net gain, there is no net gain. My tax planning for my clients looks at their business needs, how they want to improve or expand their business, and then picking the best method that creates the least amount of tax or the biggest tax savings. So let me get Rob going here, see if I can find him. I know he's been busy with Christmas and having some fun things. Rob, where are you and how are you doing?
Brian, I am feeling fine. Thank you.
Great. Well, Rob, let's divide the show into 3 parts. First, let's describe cloud computing. And Rob, if you can maybe start off with the esoteric items, since you're more of a computer than I am, and I'll talk about it in the general business concept. Then let's do 2 case studies. One is a local plumbing company here in California. The other is using the Toy RS model and looking at what type of intangibles exist today that did not exist when Toys R Us first did their planning back in the 1980s. And then lastly, I'll discuss the best tax structure. Now, Rob, you did some research on the technical aspects of what is a cloud computer. Can you tell me what you found?
Brian, a cloud computer is also known as a virtual computer. A virtual computer is all electronic. It has no hard drive or motherboard. A very large computer runs a program that creates virtual computers within the memory of the large computer. The cloud providers manage the infrastructure and platforms on which the applications run. The cloud computer is sometimes referred to as in-demand software. It is priced on a pay-per-use basis. You pay monthly fee. You pay for the capacity that you need. If you find that you need more computer capacity, you merely rent more capacity. The cloud computer providers generally price applications using a subscription fee. Proponents claim that the cloud computer allows a business to reduce IT operational costs by outsourcing hardware and software maintenance and support to the cloud provider. Plus, with applications hosted centrally, updates can be released without the need for users to install new software. You access cloud-based applications through a web browser or a lightweight desktop or mobile app, while the business software and users' data are stored on cloud servers at a remote location. Proponents claim that cloud computing allows enterprises to get their applications up and running faster, with improved manageability and less maintenance, and enables IT to more rapidly adjust resources to meet fluctuating and unpredictable business demand. Cloud computing relies on sharing of resources to achieve economies of scale similar to a utility like the electricity grid over a network.
Rob, that was great. In my experience, my clients' cloud systems, and they have some pretty heavy-duty cloud systems, is about $50 a month. And the cloud computer actually replaces your in-office server. Now, the kind of tax planning we're talking about here does not mean you eliminate your in-office computer server, because many of you need it for a variety of functions. But it allows you to either take a portion of the applications in the data from that server and put it into a Nevada company, and we'll talk about that tax advantage in a second. Or, more importantly, as you look at the cloud and cloud marketing, we're going to see great business opportunities that many of us do not believe applies to our local business. And these same business opportunities give the small business, especially, new tax planning advantages, which heretofore were only available to big business. Rob, can you give the audience some ideas of how to use a cloud computer?
Here are some ideas for a cloud computer system in Nevada. Brian, I know one of your favorites is to have a client start a coupon campaign. In effect, become a mini Groupon. As you know, you can hire a firm to handle all of the web interface. They can also find you a good email list and help you with a business Facebook page. Another popular method is the Toys R Us method. Last century, they placed their trade name and trademark in a Nevada holding company. However, this works for a larger company. But now, small businesses are using this model to place their database and computer server in a Nevada company. For some businesses, innovative software does office administration and inventory control. The Nevada company charges for the use of the software, its data, and the administration. Netflix is a great example. Their computer system does every aspect of the order. The inventory of movie DVD is scanned and stored locally. But the computer processing of this huge inventory can be located anywhere.
Very good. And it's a shift. It's a shift in our thinking. You know, we started off, older people like myself, with having paper and files and accounting records in our office. We slowly got a computer. They were larger, now they're smaller, but that was in the office. And then we had to get elaborate backups. And now, the advantage of actually not having something in your office besides cost advantage is tremendous. If there's a fire, if your computer gets destroyed in your office and the backup, you're in trouble. And there is offline backup. I've had to restore one of my data from my offline backup. And it was really clumsy. I didn't get the right, I got the files back, but the information as the date the file was created was gone, and that can really affect a database program, where cloud systems have 2-3 different types of backup. You can back it up yourself, too, but they have their own backup. So we're going to look at 2 case studies. One is a small plumbing company who's being hammered by big competition, and in part because the big competition could afford to use paper media for advertising, and the small plumbing company really never thought they were a candidate for web type of advertising. They just couldn't see how it fit to them. The other, we're going to look at the Toys R Us structure and try to apply it to a broader base of small business use, looking at having a business system, which is an intangible asset in the Nevada company. But I want Rob to start off with the plumbing example. And here I'm looking at the advantage of using a coupon and looking at the fact that Groupon charges a lot for the service. They charge up to 40%, sometimes 50%. And if you can create your own mini Groupon company yourself, then you can shift these profits or have the Nevada company as this Groupon company make these profits, state income tax-free, and also give yourself some asset protection. So, Rob, can you kind of dive into this example?
Well, White Plumbing was experiencing declining year-over-year sales. Their competitors were outspending them by a factor of 10. Print and traditional paid online media were waning in success, and White Plumbing needed to find a new model to drive sales. They needed better customer data and a cheaper way to reach their customers. They contacted us to find the best tax profile. They had read in your blog that tax savings is not about deductions. Tax savings come into play by designing your business to pay less tax on its income. In this case, we used the Groupon model to shift income to a Nevada corporation. It is the high cost of Groupon that makes this great tax planning. Groupon takes up to 40% of your revenue as a fee for using their service. For this, they handle everything and write you a check. Your Nevada company can do the same. It can hire a firm that provides the web services that are used in a coupon campaign. These companies provide you everything that you need to be a mini Groupon. To expand its business, White Plumbing started a coupon for Unclog Any Drain. The coupon provided a special for $99 fee to unclog a drain. The Nevada company ran the coupon campaign. It collected the $99. The Nevada company hired a third-party provider for the email campaign and the coupon functions. This cost $10,000. The campaign was a success with 1,000 coupons valid for 1 year. The Nevada company earned $99,000. It had net profit of $39,000 after paying the $10,000 for the coupon campaign and after paying $60,000 to White Plumbing. White Plumbing California income was reduced by $39,000.
Great, Rob. And what this study indicates or exemplifies is that tax planning for this plumbing company was not about finding tax deductions or taking fast depreciation. It was looking at a problem which became an opportunity, addressing the ways to expand the business to make more money, but doing it in such a way that this additional profit was taxed at a lower tax rate. It's about creating wealth by improving your business and then selecting the best tax method. Now, to the Toys R Us model in the 1980 concepts, Toys R Us established a Delaware holding company to own its branding intangible. Now, last century, creating a brand or image was too expensive for local small business. Now it is a must. Even a small business, if it wants to face its other small business competition, must start to expand themselves, create a brand, and start to exploit the advantages of the web. If you aren't doing it for your small business, not only are you finding big business, but now you'll be finding other small businesses. So, Rob, I want you to kind of explain the Toys R Us. This was a little technical because we're going to go into some intangible concepts that can be placed into a Nevada company. So if you can, just kind of listen carefully.
Toys R Us has a great tax team. Last century, only the big national firm had a brand name. This century, successful regional firms are branding an image and name on social media. If you are not branding, Brian and I hope this blog talk show will encourage you despite the tax savings. Let's face it, most of us sell a commodity. May it be plumbing or a product. quality and value is merely perceived. The first step is transferring your intangibles to your Nevada company as part of its setup. No money is paid to you for these intangibles. They are part of the company capital. Next, the Nevada company hires the party or parties in charge of your branding. It incurs all of the branding costs. Form is important. So, register your trademarks. Patent your practical know-how. But there is more tax savings when your business has a sophisticated computer system, such as an inventory system. If you have such a system, you know that it is a big part of your business success. The key to success is your Nevada company paying the cost to maintain the assets. Lastly, merely pay your Nevada company a royalty and/or a fee for these intangibles. Each toy or a store paid a royalty based on gross income to the Delaware holding company for the value of its trade name.
That is great, Rob. And so this part is very customized. No one business has the same type of intangible value or property. And to repeat myself, quite often a small businessman doesn't see the intangible assets. They see his hard business office, maybe a restaurant or plumbing. But there's a lot of intangibles in your business, from trade names to trademarks and what's known as practical know-how. Now, this last part of this tax talk is going to talk about the different types of tax structures. Is it going to be an S corporation, a C corporation, a trust? What are the best choices? And, of course, there are many choices, and each one fits the needs of the family. However, my favorite choice is using a Nevada trust, a trust that is the type one we use for estate planning, even though estate planning probably is not your goal. But these same trusts give asset protection. I believe every small business owner should have some assets taken off the risk of his business and placed into a place that cannot be seized by a creditor. Nevada Trust is one of the easy-to-use tools. And my favorite structure, this Nevada Trust then forms a Nevada limited liability company or a Nevada corporation that's going to be taxed under Subchapter S. In both cases, they're known as a pass-through entity. So the party that's going to pay the tax is going to be the Nevada corporation. It can be the Nevada Trust. It's going to be the taxpayer. The income's going to flow through the Nevada limited liability company or the Nevada S corporation into the trust. If you need the money for your business operations in California, it's fine. The Nevada entity can joint venture with you, loan it to you, can do anything you want. As long as it stays within the Nevada structure, it's going to be free of state income tax. And actually, when you make a distribution from the Nevada trust, if it's accumulated income, it's going to be free of state income taxes also. Now, these are pretty technical items. I encourage any of you to give me a call. Once again, my name is Brian Dooley. The phone number in Orange County is 949-939-3414. And I wish you all great, happy tax planning. Do not worry about the fiscal cliff. It's going to be merely a little bump in the road.